All right, you guys can hear me now, right? Hello? All right, awesome. Okay, well, my laptop is still a little bit laggy, but hopefully it's not too bad. I've got the Trinity up and running. I've got the trading view up and running. I'm just going to go back and forth between these two screens because I can't run my trading view app right now. Um, but yeah, today I'm just going to go ahead and cover like a pretty detailed recap and review in terms of how you can use the Trinity Mode feature on Skylit to effectively trade zero-day expirations. So since I know a lot of people here might be a little bit new or they might not have seen the other videos, the Trinity Mode feature on Skylit effectively is a cheat code or hack for being able to see what the market sentiment across SPX, SPY, and QQQ look like. If you're going to trade SPX, like you can't simply look at the heat map for XPX and the dealer exposure for SPX alone because SPX and SPY are like pretty correlated and interdependent. And also QQQ has like heavy influence across the overall market now, especially with like memory stocks and mega caps and semiconductor stocks having so much popularity these days. QQQ will move the overall market. So I think it's incredibly important for you to have a good grasp on all three of these. If you don't, then you're probably just going to get screwed. Okay? So just going right into it. On Thursday, like I posted a recording and a video to pretty much prove like the precision of the Trinity view because ultimately, if I'm going to go ahead and market something and say it's the best thing out there, I've got to put my money where my mouth is. So, I threw down 250K into zero day expiration SPX play. And like by the way, like that's not really a full port for me. That's still like maybe 5 to 10% of my overall port. So like nobody should be full porting. Like I mean, especially at the level you guys are at right now, like it's the dumbest thing to do. Generally, for zero day expiration, like I usually suggest people to keep it at maximum 5% of their portfolio size and just size down to zero, meaning if you take the trade and if it flops and you lose the entire position, the max your portfolio could be down is 5%. And like I would consider that pretty aggressive still, okay? So just a general rule of thumb, when you're trading zero day expirations, like never go full degen. Like you have to manage risk. The time in the day will come eventually when you can go ahead and load up like a secondary or tertiary port that has like money you're willing to lose. And like you could do full port challenges on that, right? But like most of you guys are not there yet. If you can't prove to be profitable on like a normal portfolio, like trading like sizes that normal people should be trading, then you probably have no business sizing aggressively. Okay. So let's go ahead and take a look on Thursday. Thursday, it was one of those days where I just woke up right on time, and I had a good feeling about the overall market. Quite frankly, like I can't tell you like how I get these like feelings and intuitions, but after a certain while of trading the market, like based on how the previous days play out, you can get a general idea where it's like, okay, yeah, tomorrow like they're gonna run a bull trap and then they're gonna fucking flush it out the gate. Um, that generally tells me like I should be ready and I should be at my computer right at 9:30. So that's what I did. Let's go ahead and pull it up. I think it was on the 22nd. This is all in Eastern time. Let's go ahead and look right at market open, what everything looked like. Okay. So even at market open, hold on just a second. This was at market open. All right, so this is 2 minutes into the market open. Um, even at this point, right? Like one thing that you notice is that hold on just a second. One thing that you're gonna notice here is like SPY is at like the top of the range right here. Like it's all the way at this like mega node right here, which is showing like negative $51 million worth of exposure. And then you've got a downside node right here at 685, and then you've got another one down here at 682. So you've got pretty strong downside pull already while it is sitting at the top of the range. Like this to me alone is like an incredible setup. Like even if I'm looking at the SPY setup alone, I'll be like, yeah, I'm gonna fucking short this, right? Um, the great confluence that we got after that is that the SPX King node was at 6,900 right here, right? Which is around, I mean, 23 points below where we opened. If you look at SPY, for example, I generally like when I'm trading these, like my stop, like if I were to use a stop loss, which I actually don't. Generally, my stop loss is like one strike above where I'm going to enter. So I would enter at 690, and if it broke above and held above 691, like I would be like, okay, like this trade's not going to work. Okay, so if you want to look at the risk to reward, you've got 1 point risk to the upside, right? And you've got 5 point reward to the downside. This is a 5-to-1 risk to reward setup. I generally tell people that the rule of thumb that I look for is a 3-to-1 or better. If it's a 3-to-1 or better risk to reward, like I'm going to go ahead and take it because that's an incredible opportunity to take. So SPY, first thing first, like this shit is A plus. Okay, that's how I grade it. Right out the gate, it's an A plus. Do I take the trade right away? No, because I'm still waiting for a ceiling to show up on SPX, and I'm still waiting to see how QQQ plays out. Because like the only concern with QQQ is like it's got a little bit of an air pocket all the way up to 625, and like that can get scary. Like ideally, what you want to see is like 623 and 622 serve as a resistance. So let's go ahead and see what happens. But ultimately, your downside targets are showing 617 and 616, right? So you've got a downside target down here. SPY is showing downside targets, and SPX is showing downside targets. That is a 3 of 3. Okay. And now let's go ahead and scroll through. Let's just see how things evolve, right? So now what you see here is the 6930 is starting to become a potential gatekeeper, right? This is becoming a potential gatekeeper. But look what happened here at QQQ. Do you see these double yellow nodes significantly grow in value? Like, let's go ahead and see. Let's go back. Go back one, please. So we went from here and we went 1 minute and look at that. Look how much that shit grew. It grew by 10 million, like instantly. And if you read the docs, if you watch the videos, then you know if there's a double positive that is forming, like I call that a double Pika ceiling, like this shit has a very, very low likelihood of being able to punch through that. And I'm gonna be looking for a short setup already. Like they literally threw in a double ceiling there. Like if you missed this, then like you got to keep on watching the replay. But like for me, like this was a sure telltale sign that like they don't want the market going higher. Um, so let's go ahead and see how everything plays out. Okay. All right. So the double ceilings are continuously growing in size on the QQQ. It's at 18 mil now. We're going to keep an eye on the SPX. Even though the price went down, that node grew in value. So that ceiling is growing stronger and stronger. The QQQ ceiling is growing stronger and stronger. So for me, I'm like, okay, this looks good. And then actually, I think it was at like this is when I thought it looked good right here. At 690, the double Pika is like I'm already in. Okay, so let's take a look. 935 on this particular day. Let's see what it looked like. Okay, this is let's change it to New York time. All right, so 9:30. Uh, all right, so first thing first, right at 9:35 is kind of when we found out, right? We actually got a little bit of a dip there, but remember, like I'm not going to chase puts on the downside. What I am doing is I am patiently waiting for us to tap the morning high right there. And this is like one of the very, very rare occasions where sometimes like I might zoom into the 1 minute to just get a little bit more clarity on what the structure actually looks like. And what you'll see a beautiful, 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 beautiful Timmy Hunter right here. All right. That is what I call a liquidity hunt. In other words, I call that a Timmy Hunter. When I'm looking to short, I am looking to short into this liquidity hunt because the heat map Trinity gives me full confidence that there's very limited upside left and there's a lot more downside remaining. So if I look, the Timmy Hunter is at 6930 and you've got your downside target at 6900, right? Which is right there. Like this shit is not a joke. Like you saw it on the map, the 6930 was the gatekeeper into the downside. You had 6900 as your like major keynote target. For me, when I enter, like I'm not waiting for this to reject and the red candles to start printing. Like the reason why people wait for confirmation Like the historical, like, a lot of people are like, okay, like this, like the price would have to break below 69.20 for this to be bearish, right? But like by the time that happens, like the put premiums are already juiced. You've already lost a 10-point move from the top. And for anybody that knows, like that is like a 30 to 50% like return, bare minimum on SPX contracts. What that means is if you enter on this breakdown candle right here, or if you try to wait for a retest to come back up, which it won't give you, like your risk to reward is just not good. Like you're going to be chasing this breakdown candle. You're going to have to slap the ask on puts. You're going to enter. This shit is going to wick up on your ass because it bounces right off the gap entry right here. By the time this wicks up and this green candle prints right here, your puts are already down 25 to 30%. Like that is how zero day expiration trades move. Imagine being in a 200K position and you are down 20 to 30% on your position right as soon as you enter. Like that shit is not fun. So for me, like the only way I've eventually like trained myself and learned to trade the game is like I want to front run the moves because Heat Seeker and Trinity gives me full confirmation and it's a leading indicator with regards to what is soon to happen. That is the most important, okay? Trinity is your confirmation with regards to what could soon eventually happen. Nobody can predict the future with 100% confidence. Even if you didn't use Trinity, for example, there's nobody out there that will tell me, okay, it's going to mark this level and it's going to reject. Okay. Like, I mean, somebody might be able to a couple times, but like not to the level of accuracy that the Trinity mode is pretty much tuned to provide. Okay. So for me, what I do is this is the double top right here. I am looking to enter on this rejection. So what I do is right when this candle is actually breaking through, I am already predicting that this is going to be a liquidity hunt and we're going to get an aggressive reversal from there. So as this candle is printing towards 69.27, 69.29, I look at the bid and ask spread of SPX and it might show something like, $6 to, $6.20 in terms of the bid and the ask. Generally, like I use a rough estimate and I'm like, okay, $6 is the bid. Like I would be willing to buy that if it dropped down to like 560 or 570. So what I do is I place a limit buy order at a price that I'm willing to bargain for. Like I'm always bargaining with the dealers. Like it's never about me saying like I must be in this play and like I must fill those contracts at all costs. Like I'm at the fucking swap meet and I am bargaining for option contracts. I'm not even buying from market dealers. That's the greatest thing. Like when you're slapping the ask, it's an exchange between the market dealers and you. When you're buying at the bid and when you're buying at the mid, the good thing about it is that you're actually buying from retail traders that are getting stopped out of their puts because they think this is a breakout and we're going to go higher. Okay? So I slapped an order for like I don't remember how many contracts it was. I mean, sometimes it's 400, sometimes it's 700. It must have been a pretty good amount, but I get filled through all of them. And guess what? Right after I get filled, because I got filled so good, even on this little tiny like red candle right here, like my position is already up 15 to 20%. Like that's just great because I'm up 15 to 20%. I would be able to put my stop loss above my Timmy Hunter candle right here. If this closed above here, I would stop out. Like my stop out would probably be like a negative 5 to 10% loss, whereas the upside is freaking significant for me. Like, I played it down to here and I think, I for me, like because I'm in a position so large, like a lot of times like I can't hold through the full move. But what I did was when I retested this gap entry right here, what I did was I scaled out at like it was like 55% or something like that. Like I scaled out of a significant portion because I knew you would get some kind of bounce. And then I rode some runners down and like ultimately by the time it got to this point, it hit like 180 to 200%. So I effectively risked a 15% like max loss on my position for a potential 150 to 200% gain. That is almost a 10 to 1 risk to reward ratio in terms of option premiums and how they move. All right. So that is the importance of like being like a lot of people are scared to front row moves and like everybody online will tell me like I'm crazy for like trying to teach people to front row moves. But like the reason why people are so against it is because they never knew how to do it and they were never provided the right set of tools to be able to front run the market. All right. So heat seeker is a leading indicator. It's probably one of the only leading indicators out there. The greatest thing about it is the freaking precision of it, though. It's like, look how precise the rejection is. Like another key tip is on SPY, like you have a purple node, like I call this the Barney node. And if you read the docs, what you'll see is that purple nodes are volatile in nature. They're also pro-cyclical in nature. And what that means is if people are buying in a negative gamma regime, then the dealers have to buy more. So it's a buy-buy loop. The thing about this though is that the purple nodes, they have a chance of overshooting, and the chance of overshooting is pretty high. But ultimately, if it overshoots and these go in the money, what happens is that people start to cash in. They start cashing in on their calls. And what that results in, so first thing first is delta saturation, because the delta gets closer and closer to one, which means that like dealers effectively don't have to buy as much to hedge anymore. Number two, when they go in the money, a lot of people are either cashing out or they're rolling them out to like further expiration strikes. So when it overshoots, like that's essentially my sign that like okay, it's just a purple node, so it's overshooting and it's going to reject. And I usually give it a 50 cent overshoot margin for SPY and QQQ. For SPX, it's around 5 points, anywhere from like 3 to 5 points. Okay, it's very rare that it will overshoot like 8 to 10 points on SPX. If it does, then most likely like your trade is going to get shafted. Okay, so let's look what SPY did at this exact same time frame. So remember, we saw the 690. If I'm expecting it to overshoot by 50 cents, then 690.50 is where my perfect entry would be, okay? So let's look at the time I entered, 937 right here, or 938 or something. It was, all right, so 690 was the node right here. And if you're expecting a 50 cent overshoot, then the top of the range is right here. Do you see how these candles never closed above 690.50? Like this is like my literal entry right here. Like this is my literal entry, right? And I'm getting filled at the bid because I'm actually buying as the candle actually overshoots this level. But then after I'm in, it wicks down and it dumps from there. Okay. So hopefully that all makes sense. Like that's pretty much how I sniped the entry. The reason I sold at 69.20 is because well you'll see how it plays out right here. Okay. All right. So right here, like everything kind of changes. The QQQ ceiling is still pretty strong at 622. Like if I'm looking at QQQ, like if it breaks above 622, like I'm probably fucked, but otherwise I'm okay. But like you'll see right here at 6930, this is the perfect entry. The reason I sell at 6920 is because you've got like one small gatekeeper here. Like it's not significant, but it's still like a little bit risky to expect it to just flush through. All right. So I'm being very careful to not be greedy. And if you go back to SPX, all right, so if you go back to SPX, let's see. Who the fuck is scribbling on my chart again? I thought I disabled that, but I guess not. All right, so if you look here, like as it's dropping to 69.20, like I actually sell into this with like limit sells. So even when I'm closing on my trades, like I sell into weakness. So like I actually get really, really good fills on my sell orders here. Um, and yeah, quite frankly, like, if I wrote it down all the way, like that would have been, I mean, that would have been a fucking like half milli a day for me probably. But yeah, we don't get too greedy, okay? So that's pretty much how it played. And like that's not the only trade. Like if you missed that one, like here's what you could do as well. You know that 6,900 is going to be a bounce zone, right? So you can actually take a bounce scalp right here. The reason I say a bounce scalp is because if you look here, like SPY supports a potential move up to 690, but like that's about it. QQQ has like Barney is supporting here. It's got a 620 node. So like, that's when I say like, yeah, you could take a bounce here, but like you should be looking to scalp it and get out quick because QQQ is probably going to smack price back down again. Okay. And then afterwards, it just chops around, people get fucked, and then yeah, that's how the day pretty much played out. All right, so hopefully that was helpful. Any questions on the whole set? Actually, let me go through the questions real quick. Yeah, but like, I mean, The reason I try to train and like coach everybody to become a sniper when it comes down to your entries is because like your exits and like your trade is gonna be significantly dependent on how good your entry is. There's multiple reasons for this. Number one is your entry effectively determines what your drawdown is gonna look like. Your entry is also gonna pretty much determine I mean, fuck, that's what it determines, right? It determines what your drawdown is going to look like. And like drawdown is the thing that scares the most people. Like when they're entering a trade and then they see their trade going red, like that's when they start panicking and that's when emotion starts to enter the fray, right? So like for me, the only way for me to get my emotions in check was to effectively trade with zero drawdown. Like that's always been my goal. And I'm actually very, very bad with exits. Like I'm very bad at holding until final targets, but quite honestly, I'd rather trade a zero dot drawdown trade and take like 50% or 100% off the table than take a trade that's going to draw down around 25 to 50% and go like 300 to 500%. The only reason this is because it's the only way to curb like my psychological aspect and like my emotional side of trading. I can only do that like when I have little drawdown. Like especially when you're taking position sizes like larger than like 20K, 50K. Like even if you're taking a 50K position, like if you've got a 20% drawdown, like you're down $10,000. Like dude, you could do a fucking shit ton of you could do a lot with 10,000, right? So ultimately, like that's kind of why I developed the way of trading that I do. A lot of people might disagree with it, but for me, it's what's worked, and like it's the only way I was able to kind of tame like my inner beast, which is generally pretty like emotional and intuition based. So yeah, that's the only way like I know how to trade today. It's like I need to trade where drawdown is as low as possible. Yeah, this is all real-time data. You don't need to know how we get it, but it is all real time. Like it's actually derived from four different sources and also includes like a proprietary inference model and calculation that I run. Arnav, I don't know what your question means. Like you're saying, how can we use the bid-ask spread to identify the liquidity? I don't use the bid and ask spread to identify the liquidity. Like I pretty much like I use the bid ask spread to like negotiate and bargain for a good fill. Like that's what I use it for. I don't think you can use that to identify the liquidity though. Liquidity is just like you just draw levels on your chart and you're like, okay, I'm expecting a sweep to happen here where stops are going to get triggered and then the move in the opposite direction is going to happen. Yeah, 69.29 was the high, 69.20 was the gatekeeper, and 6900 was the downside king node. Yep. Yeah, generally, like I don't use I use Heatseeker a lot more than like I literally told people like I can trade without a chart. Like I can trade purely off of Heatseeker. Like the only reason I don't suggest it to anybody else though is because you guys just don't have the same amount of screen time I have with it, and you don't have the level of trust built with it that I do. Like I've been using this for over 18 months now, going on 2 years soon. So like I've seen every single scenario play out, and like I've just been trained to like understand, how to use it without a chart. But everybody else should still be using the chart and doing technical analysis. Yeah, I was pretty, yeah, that was for me, that was a 2 minute and 30-second trade and I was done. Yeah, entry timing is the hardest thing to get good at, but actually the reality is that exits are even harder than entries. So like that's still a part of my game that I'm looking to sharpen up and get better at. And I know I will. Like trading is like a never-ending like journey. Like you will always find flaws that you have to improve on. And for me, like I believe that I've damn near perfected like the art of the entries. Like I've spent so much effort and time on it, where like my entries are really, really good. But my exits can use a lot of work. Like I'm just not a fan of seeing a position be up like 130,000. Then because you get a little bearish retracement, like it goes down to only like 20,000 profit, then you might get fucked and then it's gonna go down to like negative 15,000. Then you're like, oh shit, there's a dump candle, you're back up to 60,000. And like and then there's another dump and you're up like 200K or 300K or something like that, right? It's just Like I just don't like playing roller coasters like that. Like roller coasters are a good way for people to like trade out of emotion and like have poor psychology. Like all of my trading strategies and like reasoning is essentially there to curb like my inner beast, like all of my like faults. I think that's the most important thing. Yeah, being able to learn the Trinity and come back to your chart is correct, but I also know people that do it opposite. Like John Wicks draws the levels first and then he goes to heat maps. But yeah, for me, like I just shortcut everything and I usually never prep the day in advance. Like I usually just open up Trinity, I look at the levels and I'm like, okay, like there must be a support or resistance there or some liquidity level there. Yeah, in terms of the times I'm looking to take a trade, like I generally like trading from anywhere from like 9:30 to 10:50. Anywhere from 10:50 to 1 p.m., like a lot of the good moves already play out and like it starts to slow down. And the big warning I give everybody is if you missed the first or second like good trades of the morning, like you should just take off for the day and come back for power hour because they usually only give like two or three really, really good setups a day. Um, the rest of it is to eventually like effectively trap people into looking for the next trade and then chopping them up. Like think about it, right? Like if I am in control of the market and like I own the market, I know that if people miss the first good setup and they miss the second good setup, they're gonna FOMO and they're gonna be desperate to enter a trade. So I'm gonna fuck with them. And I'm gonna take advantage of all of those people that are trading out of desperation rather than being patient and waiting for setups to come to them. And I warn everybody, if you miss the first trade, if you miss the second trade, like just fuck off for the day. Like just like you don't deserve to trade after that point, right? Like you need to be prepared, you need to wait for the setup to come. But because you weren't prepared, because you didn't wait for the setup to come, you're gonna force a third trade or a third setup because you want to make money. Like it's the easiest way to blow your shit, and I see people still doing this every single day, and like it's such simple advice to follow, but like people don't follow it, and that's why people are not profitable. Yeah, for SPX, if it's like a double Pika, like I might front run it by like 5 points. If it's just a Pika, like I'll enter right at the node. If it's a Barney, then like I'll look for it to overshoot like 5 points or 3 points or something like that. Yeah, it's all very dynamic and all very it all differs. Like you just have to come up with your own style. Like I can't like I'm surgical when I trade, but like if I really wanted to get every single tiny thing that is going through my brain before I take a trade, like it just wouldn't be possible. Like it's just too difficult because it's all experience and it's experience that turns into instinct. It's like the analogy that I use is like if anybody has driven a manual like car before, like when you're first learning it, like you have to be super conscious and deliberate with regards to like your shifts, like how you hit the clutch, like how you let go of the clutch and like how you hit the engage points and everything like that. And then I get somebody that comes up to me and they're like, dude, how do you like shift so smooth? Like how do you downshift where and I'm like, I don't fucking know. Like it's just through experience, right? So like when people ask me questions, like if they ask me specific questions, then yeah, I can give answers. But like to go over every small tiny conditional that I've picked up and like ingrained over the 7 year period I've been day trading, it's just really, really tough. Like it's really tough. That's why I tell people like the only thing you can do is like keep on experimenting and like building screen time. But you can get there a lot faster than I did if you just stick to one strategy and you focus on repetition and execution after that point. The biggest problem and the biggest reason people never get good at trading and never see the light of day is because they spend so much time hopping from Discord to Discord, hopping from strategy to strategy, when the real problem is that they're not putting enough reps in and they're not building like that muscle to be able to like repeatedly trade the same setups over and over again. No, there's no real-time alerts when there's a big percentage change in nodes right now, but if you use the velocity tool, then you should be able to see these things in terms of like the percentage changes in the badges. In the new Skylit terminal that we're creating, you should be able to automate this with agents. Yeah, iPhone 23, you thought the level was going to change during the first 15 minutes when market maker reshaped their positions. Yeah, like I mentioned in previous videos as well, but like the general rule of thumb is that the most volume and the highest quantity of like options being bought and sold is in the first 30 minutes of market open, that doesn't necessarily mean that everything is going to shift around and like flip on you. Like the rule of thumb that I give people is to be agile and be like quick and safe. But I never tell people like, hey, just don't like there's no absolutes. And I tell people if I see the stars align and if I see an A plus setup, like that would like I call that the Holy Trinity setup. Like that shit was perfect. Like perfect enough for me to just drop a quarter mil on it, like with like just no doubt. Like those setups only come once in a blue moon, and when they do, like I go in very, very heavy. Like there's S tier setups, which I call like the Holy Trinity. There's A tier setups, there's B tier setups, there's C tier setups. Historically, people usually say to keep your position size and consistent for every single trade that you take. Like, I think that advice is a little bit flawed as well because it really depends on the quality of the setup. Like S tier setups, they only come around once in a blue moon. So if you wanted to size consistently on every single trade and you're only waiting for S tier setups, like, man, fuck, you'd be waiting for like weeks or days before you take a trade, right? So for me, I'm willing to take A tier setups. I'm willing to take B setups. But for B setups, like it might just be a lot of position. Like I might just toss like 20 or 30K into it, which is like 10% of my usual size. And if it's an A setup, then I'll be like, okay, like I might take a full size position. If it's an S tier setup, I'm like, fuck it. Like I'll go heavy, you know? But like it's all experience. Like I've seen these setups come by. They don't come by often, but when they do, like I get excited. I went to school for management information systems, so I learned a lot of big data, database systems, software engineering. I ultimately pivoted to business and entrepreneurship though, so I have like a hybrid. Like I'm a very, very big generalist. Like I've literally done everything in school and everything in life. Like, I studied nursing, political science, sociology, um, computer science, business, accounting. Yeah, I did everything. So. Yeah. I mean, even outside of Heatseeker, like if I had to do any other kind of business, like I'll probably be able to crush it. Timmy Hunt, like 1 minute I use very, very rarely. Like the only reason I forced it this time was because the Trinity setup was just too good. Yeah, there's a level above 690 as well, but it's not going to get there because QQQ had the double Pikas and the SPX had downside, like heavy downside pull. And also the market gapped up and pumped. Like generally, if the market is gapping up and pumping even after it gapped up, like there's a very, very high chance of it reverting. Like if you actually look at the docs, what we explicitly indicate is that if the price is hitting a gatekeeper, which the 690 would have effectively become that early in the day, then there is a very, very high chance of a reversal. Like if you're asking that question, then you probably need to go read the docs again. Like all of these answers are in the docs and like it's in the videos, so I think people are just not putting enough time into things, and like that's probably why you're not finding as much success right now. Yeah, the market is a swap meet, man. Like you're either like swapping with dealers or you're swapping with like Timmys, and like I prefer to swap with Timmys. Yeah, like so when I say don't fade negative Barneys, like I'm saying don't fade it when like there's multiple negative Barneys above spot price because that shit's gonna fuck you up. But like QQQ had a double Pika and like SPX had a Barney to the downside. So it's all like the context is what matters. Like just don't take like these small snippets I say and like take it literal. Like you have to understand the context behind the meaning. Like that's the most important thing. That's why I say like don't try to understand like all of these like exact granular like like religious things. Like understand the reasoning behind everything and then put your own strategy and put your own pattern together. Like the biggest struggle that I'm seeing people have is that like they want to shortcut the process and they just want to get into my brain and say like, damn, I just want to learn everything that this guy knows and like I want to start crushing it. But like that's not how it works. Like you have to understand the mechanics of why things matter. You have to understand the context. And then from there, when you're looking at a chart and you're looking at a heat map, like you're able to start like calculating like passively in your brain like what's happening and like process things. And like that's what's going to help you with execution, right? Like even when you're learning to drive like a manual like car, like I can tell you how to drive it and I can give you every small tiny bit and piece of it, but like you're not gonna get good at it unless like you put it into practice yourself and like you put in the reps and like you go out to drive and like you just gotta try it. Like you could use the replay feature. There's no risk in using the replay feature. Like you should use more of it. Yeah, and a 30% stop on your position is way too tight, especially if you're trading 0 day expiration. Don't do that. Yeah, 30% stop loss, like you will never be profitable with 30% stop loss on 0 day expiration SPX. Like just not possible. Like one thing about stop losses that I'll teach everybody is like the mentality and the psychology that you have is that when you set a stop loss, just imagine like a bunch of fucking nerds sitting in front of like 10,000 monitors. And anytime some dumb Timmy puts a stop loss that is near current price, an alarm pops up on their screen saying, "Hey, this fucking Timmy A put a stop loss literally 2 points above where the current price is. Like, hey, there's no risk in us running it up 2 points and then wicking it back down just to trigger that stop and then have price go where it's supposed to go." Like, that's literally what's happening. Like, I shit you not. That is literally what is happening. And the only way you could defeat those fuckers is by not having a stop loss. Like, especially for 0 day expiration SPX. Like, if you just want to give up free money, then yeah, go ahead and put a 20% or 30% stop loss. But like, that's the kind of shit that makes you stick out like a sore thumb. It doesn't matter what your size is. Like if the price is only like 1 point or 2 points away, you've got a 10K position. It's so easy for them to swipe that and just go on. No, I'm not going to give alerts. Like that's not what I'm here for, and that's not what I built the tool for. And like I'm way too busy to be giving alerts. And like I don't want people to be in the same trade as me. Like I'm not gonna alert a trade that I'm in that my livelihood depends on. Like I did free alerting for like 5 years and like people didn't really take much advantage of it at the time and like I sacrificed a lot of my own personal performance while I was doing that and I'm not gonna do that again. Like I'm just really against it. But like, if you're into alerts, like we've got servers that we're partnered with, like, Bakery and like Owls, and like, you've got people in those servers that are like very, very proficient with Heatseeker. Like some of them are fucking better than me at using it at this point. So like, just join those and like you can take those alerts then, right? Like you don't need my alerts. Like those people are like they're really, really good. Like RDP, like real Donald Pump or whatever his name is, like that guy in Bakery, like he trades 0 day expiration SPX and NDX, and like I think he's really, really good. So if you need like alerts to follow, or if you're just trying to like follow along somebody, like I know he uses Heatseeker religiously, and he fucking crushes it with SPX and NDX. So yeah, you can take a look. If price is at 69.40 and gatekeeper node is at 69.50. How close would you let price get to that gatekeeper node before you place a bid for the rejection? Within 5 point, like within 3 to 5 points. It depends on if it's yellow or purple, and I think I mentioned this one earlier in the video. But generally, if it's a Barney, like I'll wait for it to hit 69.50, if not slightly overshoot it. If it's a Pika, then I'll start scaling in as it approaches 69.50. But ultimately, you got to look at SPY and QQQ as well. So just be careful. Like, don't just trade off the SPX map. Yeah, you just gotta have a lot of screen time, just watch a lot of replays, like just watch shit play out and like I mean there's literally no other substitution. Like you guys are trading against the best traders in the world and you're trading against institutions that are managing billions and trillions, and you're trading against the citadels of the world where Robinhood is literally selling all of your data to them. It's like, all of the odds have been stacked against us for like decades. So, like, if you're thinking that you could just put like an hour or two a day into this and like treat it as a hobby, like, you're not gonna make it. Like, you might as well just give up right now. Like, you've got to want it bad enough. And ultimately, if you want it bad enough, then you're gonna put in the screen time. Did I end up holding any runners down to 6,900? Yes, I did. I think I had like overall like 400 or 450 contracts, and I think I held like 50 of them down to 6,900. So yeah, just 10% of my position, I held it. Heat map velocity show clues when to exit. No, it can't. Like your exits should just be based upon like your contract percentages. Like if you're up 100% on your contracts, just sell half, make the trade free because even if the other half went to zero, like you would still be break even, right? What are the limit entries you use for 0 day? I gave you examples, so if you missed it, then just go back to the video, like earlier in the video and go over it. I'm not going to repeat it. I took a 69.20 put. Did I take a 69.20 put? Yeah, I don't know what strike I took, but usually when I'm choosing strikes, like I'm not even thinking about it. Like I think I had like 250K in my port, and like I just try to choose like a I just try to choose like a nice even number. Like I like to trade in like 100 LUTs, so like I want like 100 cons, or I want 200 cons or 300 cons. So I'm generally going to trade the premium price that enables me to have a nice even round number. No, I'm not. I'm never gonna make similar profits without Heatseeker. Like a long time ago when I was trading, like when Heatseeker went down, like I just didn't trade. Like it's like running blind. It's literally like what like like not having Heatseeker is like running blind. Like you can take my trading view away, but you can't take my Heatseeker away. Gengar node, yeah, that'd be pretty cool. I call them Barney bouncers and Pika pillows. The A plus setups that I like to trade the most, like Um, I like to trade like calls when price is approaching a Barney bouncer with an air pocket above it to another Barney node. Like those are really really nice. Like the only thing that's scary about a Barney node is like yeah, if it rejects and it moves fast, so like you get paid. But like if people just want to keep buying, like you're gonna just fucking get squeezed out. So like the risk is just a lot higher. It's a very high risk, very high reward setup. Because it's pro-cyclical in nature, that's why. Yeah, I'll go ahead and show a demo of the February release after I turn off the recording when I answer all these questions. Yeah, I don't look at pre-market because everything changed, especially on Thursday, like it gapped up significantly. So 6910 was not the floor on Friday. 6900 was the floor on Friday. Yeah, that one hit around 300%. Yeah, I don't use the alert system in Skylit. Like a lot of people asked for it, so we developed it and pushed it, but I don't think people are even finding it, like using it, to be honest. I have something a lot better coming in Skylit Terminal V2, so the alert system will become even less and less important. Yeah, when does a trade become invalid? I think a trade generally becomes invalid when the price breaks above one node above where your entry was. Like that's my general rule of thumb. But it depends. If it's a high liquidity ticker, like that's true. But if you're trading like low liquidity tickers, like the undercuts and the overcuts are a lot like deeper. So you generally like just have to ride it through. Possible tariffs upon Canada. Yeah, I think the market could be pretty red on Monday. I mean, weekend Wall Street is down pretty bad right now, I think. How long does it take to get proficient with heat maps? Like, dude, if you're fucking dedicating your life to it, probably within 30 days. If you're trying to do it full time, like while working full time, like probably within 2 to 3 months. But like, I mean, this is the thing I'm gonna tell you, right? Like, becoming a professional, profitable trader, trading against the fucking best people in the deepest pockets in the world, and machine algorithms that have no emotions is probably harder than becoming like quite honestly, like I think it's harder. Like if you want to be in the top 1% or the top 5% of traders, I really do think it's harder than becoming a professional golfer, a professional basketball player. When you look at the best basketball players and golf players, think about how much dedication, discipline, and time they put into the gym and like put into repetitions and stuff like that. Like if you're not willing to practice this at that level, like man, you should rethink your career choices and like rethink what your hobby is going to be because you're just going to blow money left and right nonstop. Like I'm warning you, like this shit will literally destroy your life if you're not fully dedicated to it. So like just take that as a warning. Oh, you want to see the trade breakdown of the 6900? Yeah, I can go ahead and do that. Yeah, that shit went fucking freaking 300%. I sold that one too early. I'm so pissed. Um, I think that was at like, yeah, I think, oh yeah, it was at 6910. It was right here at that point because what you see here is you see the keynote is still at 6925. You see the floor is right here, and you've got an air pocket right here, which is a clean shot upwards. You're at a like a Barney floor here at 689, but you've also got a 690 here, which means that there's potential for upside right here. You can go up at least like a point or so. And you overshot the keynote 623 on QQQ by one fucking dollar, which means at least we should bounce up 50 cents from here. So that's why I took the trade. And you could have taken that trade like twice. So hopefully that clears it up. That's the Barney bounce. Yeah, so David, does that clear up the Barney node bounce? Yeah, I've got so many people that literally left Heatseeker saying it's too expensive, and then they went to go use a cheaper tool, and then like 1 or 2 months later, they DM'd me asking me for a promo code. I'm like, my literal motto is like they always come back. So like when people say they're gonna leave, like I don't even sweat because I know they're gonna come back. Yeah, lifetime, you could DM me, maybe we could work something out. All right, so let me see what we could do now. All right, so I'm gonna go ahead and stop the recording now.